the implications of institutional investors entering the crypto market.
Excellent. How's everyone doing today? Is everyone good? Yeah? Really good. Awesome. So, yeah, this talk will be about the implications of institutional investors getting into the space of crypto. And I think we've definitely seen that over the past few years. So in today's talk, we're going to keep it nice and chill, talking about what's been happening with that. So I'll be moderating, and we'll go through some introductions as well. So myself, I'm Tom Busby, co-founder of CryptoBusy, it's a YouTube channel, and also we have our Twitter. And then CBY Capital, which is a bespoke advisory firm incubating and accelerating projects who want to get listed onto exchanges. So that's myself. Please introduce yourself.
Ladies first. This is Paula Tavangar. I'm the principal of SwissBorg Ventures. We are the venture arm of SwissBorg, which is a crypto wealth management app based out of Switzerland, as the name suggests. And we are focused mainly on DeFi.
And I'm Josh Moden, and same with Tom, co-found CryptoBusy and CBY Capital. And yeah, excited to talk today about institutional implications.
Institutional implications, that's for sure. So I think, again, sort of going back to what we've, in the beginning of our journey into crypto, I think we started in about sort of 2017, 2018. And, since then we've seen big changes in those 5-6 years at this point now. And absolutely crazy. And I think what we saw in 2020, going into 2021, is for the first time in a long time for crypto, institutions really looking into what crypto can do for them. We saw countries starting to adopt Bitcoin as legal tender, and then also countries across the world, regulators across the world, trying to get to grips with regulation of this new asset class. So I guess, Paula, the first question is, being at SwissBorg itself, what sort of hurdles and sort of places along the way have you met with institutional investors, and how that has impacted SwissBorg over the years of institutional investors in SwissBorg itself?
Well, I think that this is not straight into my domain. We're just investing off the balance sheet into early stage startups. But if we look at from that perspective, like a bit more general, right, from the macro perspective, what has been happening, I think that even the recent events were slightly expected. Without repeating what the previous panel was talking about, I think everybody will be talking about SVB today. I think that we're in this economic cycle where we're going to see a lot of companies struggling. And here, I don't think that this is particular to any sector. It's more of like sector agnostic. I think everybody will be suffering, unfortunately. And when the economy is like blockchain, like all the nodes are connected. So when one node fails, then essentially it affects all the other nodes around. So I feel that we're going to see more struggle, and consequently, like the traditional institutions currently are hit by that economic crisis, the increasing inflation, interest rates. And on another hand, I feel that this is not the best time for them to focus on innovation. So I was expecting, like last year I was very optimistic. I was expecting that we're going to get way more institutional adoption, and basically with that you get efficiency, you get a lot of things like this, how the market actually develops. But now with everything that happened this year, which again I'm saying was quite expected with all the economic stimulus in the previous years. Now I'm a bit, let's not say pessimistic, but I think that just it will take time, because now adopting that technology wouldn't be a priority. And even to be able to trade in those markets, like there are certain lines that needs to be built internally, certain security checks, and as I'm saying, I think that everybody will be just like crisis managing right now.
For sure, yeah, crisis managing. I mean, I've actually written a few notes talking about what's happened with SVB. I'm sure you guys have been keeping up to speed and up to date with what's been happening there. Absolutely crazy. Now, I think the recent news with that is the CEO said that they're going to be resuming business as usual later this week, so that is fairly good news. But it caused a bit of a stir, a bit of a shock in the markets last week. And again, these are institutions in traditional finance, and the same mistakes you sometimes see in crypto can also happen in traditional finance as well. So the lines can be blurred there. So I guess a question for yourself, Josh, is when it comes to SVB, do you see similar things happening, or do you see people learning from what happened with SVB and applying that into future situations?
Yeah, I think it's an interesting one. I think what a lot of people don't realize is since 2000, 562 banks have actually gone bust or had a similar thing, right? And we only end up hearing about the big ones. Obviously SVB had around $209 billion under management, which made it the second largest bank to go down of all time. And that's obviously giant implications for the rest of the crypto market, hence why we saw the market take such a turn for the worst from it. Now, obviously, since everyone's getting their money back, that's then led to a massive rally. And I think that is really at the crux what the implications of institutional trading is, right? Institutions have the power to make the price go up a lot and go down a lot, and that's where it becomes a double-edged sword. I think it's important to have those institutional funds within the market, because otherwise it's not going to be taken seriously as an asset class. I think, in any other asset class, you will have those institutions almost moving the market, and it's pretty hard to avoid, and you need that volatility to make it continue in the way that it's going. But at the same time, you don't want the whole market to be leveraged on if one thing happens. I mean, the idea of crypto was to kind of decouple itself from the traditional market, from the traditional senses of the economy, and the fact that we're now seeing Bitcoin and everything else kind of link to that, I guess it's a little bit disappointing in the sense that it can't completely decouple, but it also makes sense. Obviously, if there is a recession, people don't have the money to then invest. So I think with the SVB looking forwards, I do think we'll probably see other banks. I mean, we've seen like a list come out of like 10 other banks to be worried about. So I think definitely be cautious with the banks. Obviously, I hope we don't see like a big bank run going on, like 2008 style, but yeah, I think we could definitely see more headed that way, but I just hope that the US government, especially if it's in the US, follow through like they have done with SVB and continue to secure everyone's funds.
Yeah, totally. I mean, you saw what happened in 2022. I mean, we all expected it to be a fairly good year, and it turned out to be a horrible year for crypto, a horrible year for everything involved in the macro sense as well. The Russia-Ukraine conflict, and then the surge in oil prices, and then from there inflation, and then ultimately central banks wanting to raise interest rates. And then from there, that's where you saw situations happen for what we saw with SVB, because they couldn't handle the interest rates being raised. So I think later on today, we are going to be getting the CPI data coming out from the US. That should have an implication on the market. And then also later this week, we should be getting some more information about what's going to be happening with these interest rates. Are they going to be continually raised? Are they going to be stopped at some point? So that is also something to be taken into account as well. But totally, I totally agree. I think there are other banks to look into. Are there similar situations happening in those banks compared to SVB? And then also for yourself, Paula, as well. I mean, we talk about regulation. Regulation for the sake of regulation is not going to be good regulation. You see what happens in the UAE, you see what happens in Singapore as well, and places alike where the regulation is allowing the innovation in the space. Dubai is a crypto hub, and that's amazing to see. A lot of great networking opportunities in this space. So in terms of regulation, what sort of regulation would you like to see in parts of, let's say, Europe, the Americas as well? What sort of regulation would you like to see for institutions and also for retail investors as well?
Well, thank you so much for asking me that, because I'm actually one of the advocates for the sector getting regulated. And I know most of the developers really hate that word, and they think that this is something that would restrict the building, and it will be more of a constraint than any benefit. However, being on the other side as an investor, and also even coming from traditional finance, for me it's very clear that the sector cannot move forward without the proper regulation. So what happened in traditional markets, if today you're capable to just deposit your money in any US regulated financial broker and just start trading today anything, it can be stocks, forex, bonds, and you trust that, and you can leave, literally you can leave your pension savings in that company for like 30 years, is simply because of regulation. And what we are going through these days especially, and something that made me very personally upset about the industry, there is a lot of misconduct. You cannot, like the latest stablecoin situation is a very good example. You cannot say something is asset-backed and then you put this asset at risk, whatever this risk is. So there should be very straightforward guidelines for everything, because currently we're in this situation where we're just wondering what is going to explode next. As investors, as end users, we're not supposed to do the research before investing somewhere. Like, I don't need to know who's the founder. I don't need to know his wallet. I don't need to check about the security. It's supposed to be there already. But currently, there is a massive lack of regulation. And I think that the wave is coming. It started already. And I'm actually quite happy about that, because there should be somebody responsible for when things go wrong. So in these terms, I know that this is a bit against decentralization, but at the end of the day, there should be one central authority, in my opinion, to just regulate the space, because right now it's quite wild. If we ask, maybe, we don't have too many people in the room to make a poll, but if we ask the people in the room, I'm quite sure that probably 70% of the people in a way got scammed or lost money because of misconduct of some entity.
Totally. So we've got about 7 minutes remaining. I don't know if we're available to open questions up to the floor. Is that possible? Is that possible? Okay, brilliant. Yeah, just talking about the implications of institutions getting into crypto. I think ultimately this is a good thing. Again, those regulations need to be there to protect investors, not just the institutions, but also retail investors as well. That's the great thing about crypto. It's highly accessible. You can start with as little as $10. I think we've got a question over here, please.
Oh, that's going to be a tough question, you know.
Well,
It's going to be a tough one for sure.
I'll liven it up because I'm a fan of SwissBorg, and we got to keep it moving around here. So there's different regulatory models, as I'm sure you're aware. There's the sort of the diktat model of you will do certain things, you will maintain certain capital reserves, you'll have your operating ratios in place. And there's another model which is caveat emptor, in that the regulation is designed to make sure that the market has full information, but then you take your chances full and accurate information, and then you take your chances based on that information. I don't know if I share. I mean, I'm a lawyer, but I don't know if I share your enthusiasm for comprehensive regulation, no matter what. Part of this benefit of this area is innovation and kind of breaking the rules or pushing the envelope. I would personally favor a regulatory regime based on disclosure, maybe more than mandating that these institutions do certain behaviors other than disclose. I just want to get your feedback on that.
Yeah, that's a very good point. Actually, I think it should come in multiple forms. The disclosure is definitely one of the top criteria that there should be there. But on top of that, what I see is a lot of very, very young, inexperienced people managing billions and billions. And sometimes they might not have even the bad intention, but they just don't have the experience that somebody that went through the 2008 financial crisis has, for example. So a regulation comes in different shapes and forms. So it might be, for example, board of directors for like specific types of board of directors, etc. Right? Like there are many things, but I definitely think that certain level of regulation will bring way more security and efficiency to the sector.
So let me follow up. Do you think that DeFi itself, not the institutions working with it, but say the underlying contracts or software publishers should be regulated? And
no,
how?
Don't grill me, please. I don't think DeFi can be regulated. Like that's the how we say, like this is the underlying condition lying in the name, right? It's decentralized, it's not centralized. So I think that DeFi it's very difficult to be regulated, but then it's a choice, right? So then you might go to a centralized regulated institution, or then you can go, if you're a fan of DeFi, then you can go and take the risk on your own and have maybe the regulation of just disclosure in the sector.
Yeah, I think that's super important to have it's not to have regulation for the sake of regulation. I think it's what we said earlier. If we have regulation for the sake of regulation, you're going to over-regulate the markets and too much red tape, too much bureaucracy, and again, that's where the innovation is going to be killed. It's not going to be good at all. So, places, again, like where we are right now in the UAE, where they embrace what crypto can do for their country and also the people within it, We've been to Singapore recently as well. We've seen what happens over there. The crypto companies that are over there as well. It's amazing to see the innovation, and we compare to the likes of parts of Europe and maybe in the United States as well, where they're starting to fall behind in terms of regulation, and in some cases over-regulated, and a lot of talent is being lost in those areas. So again, implications for institutions getting into crypto, it depends on where the regulation is, right? That's super important. So yeah, I think we've got about 3 minutes left, so maybe we've got time for one more question.
Yes, we can go for questions. Gordon is still standing. You have more questions?
If
not, I can keep the stage lively if you want me to. Actually, Paula, you kind of touched on it. Do you think, the topic is about institutional investors, do you think that they'll be touching the DeFi space, or is that its own separate world because of its very nature? And I like how you said it, it's baked into the cake with DeFi. It is decentralized. So is there going to be an interface with the institutional, or are they just different playing grounds?
My feeling about institutions is that they'll definitely build their own solutions. I don't think that they'll trust anyone else's technology, or the risk of being hacked is just too big. So as we saw, most of the major institutions already build their own solutions, like JP, Fidelity, etc. So I expect this trend to continue. And as I said, for them to slowly enter the market, but now everything will really slow down with the current situation. I think that crisis management will be a priority, and then eventually they're going to continue building and adopting in future.
Wonderful. So I guess let's set our sights and targets for next year and the year after. Right now we're in a world of relatively higher interest rates than normal. Where do you see things going, Josh, yourself, for the next year and the year after?
But in terms of the wider economy, or?
Wider economy, crypto, everything.
Yeah, I think it's going to be interesting. I do think, it seems like a recession is looming or already here. Depending on how they define it. But I think I'm expecting more of like a push towards either end of this year or mid next year. I think that's when hopefully we'll have more things sorted out. I think this year seems like it's going to be a bit of like another building year, unfortunately, for people involved in that, like the price increases. I think the good thing about this bear market compared to the last one is that we're actually still seeing a lot of life. We've been through a couple of them now,
we have, yeah.
And you've just seen prices go down and down, everyone loses interest, and it's just super dead. Whereas this time there feels something different about kind of the sentiment in general. We're seeing altcoins still having amazing days. We're still seeing 2, 3, 50, 100 X's happening in a bear market, which never happened in the last two, as far as I'm aware. So I think that's already a great sign. It shows that crypto is more than just where Bitcoin's price is and where the economy is. So it's nice to see that. And I think, no matter what happens with the rest of crypto in general, I think we can still see that growth within the sectors, regardless of the wider economic circumstances.
Yeah, wonderful, wonderful. So, and Paula, for yourself, what do you see happening?
Well, I definitely think in terms of technology, that's the best time to build. And the technology is there, is getting developed. There are more people entering the sector, which is incredible. But then in terms of adoption and maybe even price-wise, I don't want to make any predictions, but I feel that end of last year, we were like very positive about towards the end of 2023. And now this got postponed again to 2024 in the beginning. And now with the recent events, I see analysts starting to postpone it to the end of 2024. So as I said, I think that everyone will be suffering for a bit until the policy changes and things stabilize, because we don't really know how much the contamination of what happened over the weekend will be, right? So both sectors are interconnected. So depending on how fast the economy overly recovers, I think the crypto sector will be affected as well. But something really interesting that we saw is that the kind of the blue chips of cryptos rising over the weekend. And for me, like a very interesting trend to see is like if we see more traditional financial institutions failing, are we going to see this shift to digital assets? And I think that this will give us a very clear pathway for 2024 as well.
Excellent, thank you. I think that's it, that time's up.
Yes.
So thank you each and one of you who's part of today, and yeah, thank you.
Thank you.
Thank you so much.